Good day, we are great teachers, here to teach you accounting for JAM and WEC.
Yes, we are. Trust us. We are looking into principle of double entry. 1. Principle of double entry.
What do we understand by the principle of double entry?
The principle of double entry states that for every debit entry there must be a corresponding credit entry, and for every credit entry there must be a corresponding debit entry.
The law states that debit entry are entries that receives the value, and credit are the entries that gives the value.
It is important to know the detailed meaning of a creditor and a debtor, because most students are usually confused with it. A creditor is a person whom as a businessman I buy goods from on credit, or a person who lends me money. It is treated as a liability in the balance sheet because of the obligation to pay back the money. A debtor is the person who buys from me, a businessman on credit, or the person whom I lend my money to. It is treated as an asset because of the intention of receiving back the payment.
Before we go into questions on double entry, it is important to know the difference between cash and credit transactions.
Cash transaction is a transaction where you pay immediately for goods or services rendered. Credit transactions, payment of money for good bought, is postponed to a future date.
Question on double entry. Remember, all transactions must be divided into two parts, a debit side for the receiver, a credit side for the giver.
Question 1. Mr. Ojo paid $450 cash for rent. Preparation of the ledger. Rent account would be debited with the cash of $450 it received. Cash account would be credited with the amount of $450 it paid to rent. You can't put Mr. Ojo account, because it is being prepared by the entity, instead it is replaced with cash account. Question 2. Ojo received back the cash he paid for insurance. He received $300 cash from the insurance. Cash account is debited with the amount the insurance returned, and insurance is credited with the amount of cash paid out. Question 3. When sales is made, goods go out from your sale, and cash comes in after sales. Debit cash account with cash received from sales, and credit sales account with value of goods sold. Question 4. In this case, when credit sales is involved, name of debtor or creditor should be mentioned. Purchase of goods on credit from Emma. Debit purchase account with $300 on Emma's name, because the purchase is based on credit purchase from Emma, and credit Emma's account with the value of goods purchased on credit. Question 5. When goods are returned to the business entity, it is termed returned inward. Jackson returned goods to us. Debit returned inward account, and credit Jackson account, who returned the goods. Question 6. When goods are returned by a business entity to the supplier, it is termed returned outward. Goods was returned to Jackson. Debit Jackson account, and credit returns outward account.
There are places in principle of double entry where exam questions are normally set.
Yes, let's quickly look into it. What does a debit or credit entry represent?
1. A debit entry represents an item of expenditure or expenses. Remember, debit entry is the entry that receives the value. Purchase of goods, payment of bills, rent, rates, taxes are all debit entry in each expenditure account. The law states that debit entry are entries that receives the value, and credit are the entries that gives the value. To record these transactions, payment of rent and rates, debit rent and rates account and credit the other, which makes debit entry an item of income and expenditure.
Debit entry also represents a decrease in liability. Payment of rent and rates is a debit entry. It also a reduction of the liability of rent and rates needed to be paid.
Payment to suppliers is also a debit entry. When debt is paid, liability is reduced.
A debit entry is also an increase in the value of asset. When goods are purchased, it is a debit entry. Also, it increases the stock of goods, which makes an increase in asset, known as stock.
What does a credit entry represent? It represents
An item of income or gain. Sales of goods, rent, receive are all credit entry.
when sales is made, the cash value of goods is reduced, which make it a credit entry in sales account. Credit entry represent an increase in the value of liability. When subscription is prepaid, it is a credit entry which increases liability.
A credit entry means a decrease in the value of asset. Sales of goods reduces the stock of goods. Stock of goods or asset. Thanks for watching. Don't forget to like, share, comment and subscribe to this video for more.